We have Peter McGuire, who's the CEO at Exim Australia, joining in now. Peter, before we talk about commodities, you must be mighty chuffed about the results that happened 2 days ago, right? All of India does not like Australia as much anymore, but I'm sure that you guys really outplayed us in all departments there.
Well, thank you very much, and they're very kind words. And I tell you what, I think it hit everyone by surprise how well we did play. There was no doubting that. They were nearly unbeatable on the night. But commiserations to a wonderful team, India, and I'm sure that you'll get your own revenge to the Aussies very, very soon.
I think you guys got the revenge to the Aussies, to the Indians when we beat you at the Gabba, right? I guess this was your way of getting back. All right, let's talk about oil now. Crude prices. I remember, last week we're hovering around that $77, $78 per barrel mark. I've seen a bit of demand from there, bounced back close to around $82. Still not crossing it convincingly. It's a bit of a narrow range. What are your thoughts on the near-term outlook for crude?
Well, I think a couple of things. First off, we've got that big meeting coming Sunday in OPEC land in Vienna. Sunday, Monday, and I'm pretty sure that the overall theme is going to be one of positive news coming out from their point of view. They want to see higher prices, as we know, and it seems to be very much range-bound at the moment. That US dollar's come under some significant pressure to the downside, and crude's bounced up, and it's bounced up fairly strongly. So I wouldn't be surprised to see it gain a couple more percent over for the rest of the week and leading into Sunday.
Okay. Peter, this OPEC Plus meet, which takes place next week, what do you think would be an additional supply cut that they might consider? What would the quantum be?
Gee, that's a big question, because I sit here and I look at so many different components to the whole equation, and everyone seems to have an opinion, all the analysts. I've got to see, they're conscious as far as export numbers. They look as, PMIs, they look at industrial demand, they look at Germany, they look at Eurozone, China. So I don't necessarily think you're going to see too much of a additional supply cut. I just want to see where their theme is and what they, more or less, where their line in the sand is. Because they're conscious as far as global demand is weak across most sectors, and they really appreciate that, but still they want to see higher prices. So I think they're caught between a rock and a hard place at the moment, and I'm not necessarily think that we're going to see additional cuts.
Okay. So in the near term, at least, Peter, what would the range be, say, in the run-up to November 26th, as well as maybe up till the end of the year?
Well, we're nearly at 82 now, and I wouldn't be surprised to see a mid-83, maybe even touch 84 by the end of the week. There's 3 good days of trade in that period of time, so that momentum to take oil prices a bit higher. And as far as being end of year, well, we're only 1 month out till Christmas and New Year's Eve, so possibly a little bit higher. I won't be surprised to mid-80s, unless you see something dramatic happen from a geopolitical front, or supply crunches, or something that's unusual that really impacts the market. So I do see it stronger and a little bit higher in the short to medium term.
Would you say the same from a structural standpoint, say in the next 18 to 24 months, largely because even though there are geopolitical issues which are happening, the street soon realizes that those are local. So barring near-term flares or ebbs that we get in crude prices, it seems to be stabilizing between the 80-85 sort of range that you're talking about. Do you think that's a structural range that one should look at least from an 18 to 24 month standpoint as well?
Well, I mean, that's a long that's a long window. We've got an election this time next year in US. We've got a lot of uncertainty as far as Fed and the policies of central banks and inflation. So you wouldn't want it any higher, considering the impact that high energy prices are having to consumers globally with inflation and all the other associated costs. So I wouldn't like to see it higher, but I wouldn't be surprised that in that period of time, who knows what can happen with it. Weather outages, you could have significant geopolitics, political concerns, and what happens as far as supply. So let's say it's 85 to 90, over the next 12 to 24 months, but it could be anywhere.
Okay, just a quick last question then, Peter. The FOMC minutes are today. Any impact on crude prices?
I don't think so. I think they'll look at those numbers and they'll look at those comments very, very closely from an OPEC position. But no, I don't necessarily think there's anything in there. Pardon me. No, I don't think there's anything in there to really draw too much attention. The OPEC are conscious as far as the global economy, and certainly the Fed are as well, as far as the situation. I want to see how retail sales are this Friday with Black Friday and the impact that's going to be to markets.
Oh, okay, all right, Peter. We're going to leave it on that note. Thanks very much for joining in. We're going to let you go and play some cricket, maybe. We'll take a short break. But up next, we'll get you more on the markets and a lot more stocks in focus. Stay tuned.